for joining us. We're also streaming to you live on yorbamedia.com. All right, my guest this segment, Nick Santiago, president of In the Money Stocks. Nick, thanks for coming on the show.
Always great to be back with you, Michael. Thank you for having me.
You're welcome. Okay, what are we starting today? Which markets do you want to start off with?
We could start off, I'll leave it up to you, to be honest.
Okay. All right, good. Let's start off with the S&Ps. I got some poignant questions for you on some of this stuff.
Okay.
I had a minor cycle top last Friday on this thing, ran my numbers, said could give me a low Monday, Friday. You know, I posted on my blog, I thought Friday, had to cut, one of our Astro guys on the show said, maybe Monday. You've hit this market more times than anybody else on the show. You've really nailed this thing. What say you?
Well, as you know, I had said that you figure Wednesday or Thursday would probably start a sell-off. I'm really looking to see where this thing closes today, the S&P, and that will tell us more. I know we only have about 25 minutes left in the market session today, but I'll know a lot more at the end of the day. What I did with my subscribers was I told them to move out of the long trades now, and let's just see how this plays out. If the market had spiked up, I was willing to short it up there around the 140 level on the SPY, S&P cash, obviously around 1400. I'm just really looking to see where this is, but as you know, what I said on your show was that I would look for this thing to probably top out around the Fed or the day after the Fed. Actually, my dates came into I have some cycle dates right now, right around this time period, so I'm thinking we're real close to putting in a significant top, but I would like to see better action here, to be honest.
Got it. All right. The other market that I've been watching really closely lately is the 10-year T-notes. And they've rallied, they pulled back, and then they rallied and fell off of the, I think it was at 135-ish. And I wanted to get your opinion on that because if this thing turns from here, it could be the beginning of something big.
Sure can, but right now I don't think the 10-year T-note can get above 163. So overall, I think 163 is probably the lid for the upside. We've had a decent drop in yields today, down about 6 basis points. So again, I'm under the impression that bonds ultimately will trade higher, yields will go lower into the next couple of months, and then things will reverse a little bit at that point.
Okay, so now that's significant for me. So you're not saying that the top is in yet on the notes and the bonds. You think there's maybe one more surprise leg for people?
I think bond prices are going to go higher before it's all said and done. Yeah.
Okay. All right. That I wanted to get out of the get out of you for the show.
Yes, definitely. I believe bond prices still are building pressure to go higher. I make it easy for everybody. Instead of looking at the bond, you can look at the IEF, which is the iShares Barclays 7 to 10 year note bond price Treasury. And right now, I mean, it has a ton of strength at 108. Even if it does fall, I'm still seeing a lot of strength here. The uptrend is intact. There's really nothing that I'm seeing to get overly bearish on bonds at the moment. I think the bond market, look at the weekly chart at IEF, and you'll see that it's still a very strong market right now.
Yeah, I'm looking at it. It is very strong. All right, well, let's move on to the dollar then.
Mm-hmm.
Go ahead.
Well, the U.S. dollar index, Michael, today is having a fairly decent day considering it started down about 70 cents this morning. We did trade as low, I believe, on the U.S. dollar index, 82.22 this morning. Now we're trading at 83.45. It has pulled back off a little bit. But the dollar is just building pressure here underneath this 84 level to break out like a king cobra coiled, in a cage. This thing is still very, very strong. There's still a ton of support at 82 on the U.S. dollar index futures. And the weekly chart pattern is extremely strong right now.
Okay, would give us real strong impetus for having a deflationary fall in a lot of commodities. Which one of those are you looking at the closest?
Copper. I mean, this is nothing. Copper is. Look at copper today. I mean, it's just. The JJC is down 77 cents, 77 cents. Excuse me. And this thing wants to go to 41 in the near term, and ultimately even 35. You guys know I pounded the table on copper for so long. The cycle doesn't end here on copper, so this is still the place to look for lower prices. Copper is the one commodity that is going to suffer the most. Then you're going to see oil prices also going down, which is a good thing for people in the United States because oil gets cheaper and the dollar gets stronger. It's a win-win without even buying the stock. So that's a positive there. But ultimately, copper is still the weakest link out here.
Okay. Now, you said lower prices on the oil markets. Do you have any price targets that you're thinking we may head to over some period of time? In other words, cycle and price? Well,
I think that right now crude is setting up to go lower. Ultimately, I could see this thing, and this is the ultimate target by the fall season, would be around $76 on light sweet crude.
That's pretty darn cheap for what we've seen so far.
I mean, it wouldn't even take a lot to get there. I mean, a dollar takes off. You know, it's funny because you listen to the president, and when oil was trading higher, how he was saying he needs to create a task force. The task force is the dollar. If the dollar gets stronger, gasoline and oil go down. That's the bottom line.
Okay.
And, you know, basically the dollar should go higher ultimately. You know, it doesn't mean it's going to go higher every day or anything like that. I mean, I know you know that. But the listeners have to understand that dollar is still showing a lot of strength right now. And that's going to bring oil prices lower.
Okay, so as we see the further unwinding of Europe and the further falling of the euro, it seems to me that one of the favorite places is going to be our interest rate markets, bonds, notes, and the U.S. dollar. How long do you see that trend staying intact?
Till probably sometime in the middle of the fall.
Okay.
That's it. Middle of the fall, maybe the end of the fall season. That's it.
All right. Now, at that point, Art, the way that you ended that statement, it's like, and that would be it, too. In other words, that would be the end of that cycle. Get ready to switch gears and trade the other way.
Switch it the other way. Exactly. Yeah, exactly. Switch it the other way. That's when the central banks will finally act. I mean, you know, they can only, we talk about this every week, but they can only cry wolf for so long. I mean, even today you had the ECB, Mario Draghi. You know, he came out basically whatever he said, and you know, there was no zip on the line there. You know, you gotta you know, put up or shut up once in a while. And if you're going to make these bold statements, the market's going to eventually look to see it. Right now, the market's still giving these guys the benefit of the doubt because the VIX is lower today. I mean, the VIX is doing nothing today, and it shows you there's no fear out there. So central bankers are still holding all the cards, at least at the moment. But you know, they're playing with fire, and you know, they know they can't do another quantitative easing till at least the fall season.
Okay, which way would you, because right now we're looking at a really curious price pattern here on the banking index, the BKX. Mm-hmm. And at this point, there's going to be a lot of people wondering which way it's going to go. What are you thinking about this banking industry sector?
The index it's headed lower. I mean, it's had a pretty good sell-off already, so, you know, for the last 5 days. But so you'll find some support around the 43 level on the BKX, but ultimately, I think it's going to head lower into, you know, the mid 30s, and you know, we'll see where we are in the overall cycle at that time. But that's when, you know, the banks, everything is going to get a bid because everything will get inflated, and it's just cheap money being thrown at the market. I want to be part of that rally too. I don't want to be known as a bear. You know, everybody always comes and say, Nick, you're so bearish. Well, I'm bearish for this time period, then I'll get bullish.
Okay, got it. So as we go into the fall season, are you thinking, because you've already said you're bearish right now in the equity markets, domestically and abroad, but let's focus domestically for a second. As we go into the fall season, do you think that what the Fed does with QE 234, whatever they want to call it, is going to give us enough stimulus into our equity markets that actually it's going to be a kind of a decent rally going into the November elections?
I think that's very possible, but it's going to be probably right into those elections. So it's going to be it's going to be a close call how that plays out, whether it happens right in November or if it happens you know, late October or just after the November elections. It's very tough, but I do not believe that this is the year where, because it's an election year, the markets are going to, you know, get floated up as they often do. I think traders need to be real careful this year because, we have a lot of wild cards out there, and we haven't even spoke about China, which is, nothing short of a disaster at the moment. So, these central banks, they don't want to play favoritism with the politicians, but we know we trade central banks. That's really what we trade these days. We're not even trading earnings or stocks per se. We're trading central bank action.
Got it. All right, Nick, we're out of time. Give us a way for our audience to get into that trade room with you.
Yeah, come on over to In the Money Stocks. Take a 7-day free trial to our intraday stock chat or to our research center. You'll get all of our nightly setups, all of our videos. You'll come over to our trading room during the day. I mean, we had just a ton of scalps today. Today's like Christmas, Michael, so come on over, take the 7-day free trial. You have nothing to lose.
All right, jingle bells. We'll talk to you soon, Nick.
Take care, Michael. Take care now. Thank you.
All right, everybody. Nick Santiago, President and CEO of In the Money Stocks. This guy has been right on the money more times than you can imagine.